chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
Semiconductor की दुनिया में.
In the semiconductor world, oil is black gold, but chips are digital diamonds.
The global AI contest is sparking a race to attain chip manufacturing independence. We will dive into India's ambitious plans to catch up as President Trump forces companies to make it in the USA. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The blistering $2.7 trillion rally in Chinese equities is making investors and the government anxious, especially as corporate earnings fail to keep up. We ask Morgan Stanley Investment Management's head of emerging markets equity whether Chinese stocks have gone too far, too fast. And former Thai Prime Minister Thaksin Shinawatra flies to Dubai just as Parliament votes on the next Prime Minister, and also ahead of a court ruling that could see him jailed. Here's a look at trading across the Asia session. Markets in Asia are edging higher as investors await the latest U.S. jobs data due Friday ahead of the Fed's next policy meeting. Investors are almost fully pricing in a rate cut at that meeting, with the labor market expected to extend its weakest stretch of job creation since the pandemic. In Hong Kong and mainland China, stocks are moving higher, but the stunning $2.7 trillion rally in Chinese equities over the past 4 months is raising questions about whether those gains are sustainable. At least when it comes to earnings, those concerns about whether the Chinese market rally has legs may be justified. As this chart shows, profit growth for onshore companies is up less than 2% so far in the second quarter, slowing down from the prior period. Well, for more on Chinese markets, let's bring in our Asia equities reporter Winnie Xu in Hong Kong. Winnie, trepidation when it comes to, the outlook for Chinese stocks.
Yeah, at least from the earnings that we're seeing this quarter, really it's the slowing of the growth momentum compared to the first quarter. So that is indicating that there is still a lot of pressure when it comes to how much fundamentals have really improved for the rally. Yes, we've seen that really strong liquidity-driven rally, CSI 300 up 10% in August. However, there is a lot of concerns around, whether we have enough support from the government to kind of prop up the rally, and also if there is going to be enough funds coming from foreign investors. And now with earnings still kind of not seeing much of an improvement and a broader macroeconomic picture pointing to the weakness, investors are questioning how far the sustainability of this rally can be. But for now, because of kind of that abundant liquidity we're seeing, there is still a bit more upside in terms of how the rally can go further, although the momentum is likely to slow from here after the parade.
We know that there's growing appetite for risk, and it's making the government really nervous about it. What measures might be implemented, might be taken to taper that?
Yeah, so we've actually discussed kind of different types of toolkits that the government can potentially implement. And actually just yesterday, we heard about how the government is considering some of the cooling measures for the stock market. And that includes lifting that curbs that they have had on the short selling. So that's one way of doing it. But right now, we are looking at the government really trying to find that fine line, right? Because they have to balance two things. One, on the other hand, you want to have that stable market, and as they mentioned earlier this year, that they want to guide the long-term funds into the equity market, especially when the macroeconomic economic side of things still is looking quite weak. But on the other hand, they want to make sure that they can curb kind of the speculative tradings there, especially seeing what happened in 2015. So, there is that fine line that the government is trying to look at right now.
Winnie, thank you so much for that update. Asia equities reporter Winnie Xu there. Keeping on top of the story in China, let's get perspective from Amy Oldenburg, head of emerging market equity at Morgan Stanley Investment Management. Amy, you know what they say, too much of a good thing is not a good thing. Are you nervous when you take a look at the red-hot market in China?
So good to see you this morning. It's one of the things we talked about earlier this year. We were talking about some of the opportunities in China, and it's happened fast. It's both China onshore and even the Hong Kong market, where we've seen this IPO market just really continuing to be incredibly strong this year. It is getting pretty. The returns that we're seeing, even in China 3.0, which is the theme that we like in China, you're talking about returns of 60% or more year to date. Those are some pretty strong numbers. And I think that's one of the things that's so interesting right now about EM. We talk so much about the volatility around the market, so much about tariffs. And here we are with EM just performing incredibly well year to date, even with so much uncertainty around geopolitics and volatility. But China very much a part of that.
Murmurings, of course, that China wants to take measures to limit speculative trading. And, one of my colleagues was saying that when you take up the levels, it's quite similar to 2015 when there was a crackdown on margin financing. What do you make of that observation?
I was smiling when Winnie was saying that, and I very much remember 2015. We have been reading about that. It's very much something that we could see happen. But we do think that this is a longer-term trend within China. Some of these themes that we're investing in here, if it's robotics, if it's the new energy, renewable energy trends, the biotechnology, these are not just short-term trends here. We're looking at longer-term trends, and also the opportunity not only for exports to the U.S., but around the rest of the world. So if it's exporting to some of the other emerging markets, even Europe, there's opportunities there that are still there and possible for future earnings. But I think to Winnie's point also, we need to make sure that we're well set here in terms of the quarterly earnings that are coming out on some of these companies.
And Amy, we heard from Morgan Stanley earlier about the response from the government. Take a listen.
I think policymakers probably see the equity market as a very, very excitable dog on a very long leash. So it does, on random directions. But eventually, the policy guardrails, which is the leash, can bring it back. So what happened over the last 2 months, the debate over liquidity-driven market, the so-called deposit migration thesis every speaker on your show mentioned, I would taper expectations because the size of this excess saving in the last few years is probably smaller than most people imagined.
So his tapering expectations, Amy, should we?
I think there is. I think in the short term we should taper some of those expectations in terms of what is deliverable just in terms of that performance, especially with what we've seen year to date. I think we've seen this not only in China. I don't think this is a theme in China. I think it's the theme that we're seeing across the board. We were talking earlier about some of the numbers that are expected to come out in the U.S. The data is just so imbalanced in terms of some of these elements that you're seeing. It's very, very hard for policymakers to get this right and keep things stable, especially with all the other currents that we see happening right now. If it's the geopolitical currents, if it's the tariff currents, and then there's also domestic currents that we're seeing in every single one of these markets that's also affecting some of that policy. And the government has a very difficult job in front of them in China and some of these other markets.
It is a difficult job for the government because there is no other alternative. They talk about TINA, right? We talk about how rates are low. The property sector is still lackluster. There's no other way to make money, at least at the rate that they want to make, than the equity market. So yes. How do you square that?
No, I think it's a challenge that we're dealing with. I think even in Korea, where a lot of the wealth in Korea is held in the real estate market, and trying to look at, does that have to move to the equity market because of the population challenges that you have? I mean, we can really walk around the world and look at some of these data points, and it's, again, as I can just say again, it's a challenge for each of these countries, and each of them have their own challenges that they're facing. It's our responsibility as investors to try to well position that, especially for the long term. I think the one thing that we're seeing now, there's just so much short-term volatility here. As we talked about in China, August, a very strong month, and need to try to reset those portfolios and really position for the rest of the year here.
One of the best, I guess, investment themes in China, we often talk about how, you can continue to expect AI breakthroughs in this country.
Mm-hmm. I do think we'll continue to see AI breakthroughs. I think we're very early in the AI theme. I know there's been some people that have even considered the idea that maybe we'll start seeing an AI cooling or AI is overdone. I think when we start looking at the data where there's implementation of AI, even in corporate and enterprise, it's very early in this cycle. And we haven't even started to see some of the agentic opportunities that are coming out there and still only in development today. So this is a very long-term trend. I think we can look back at periods, even like early internet, where you saw different cycles. We saw the tech bubble burst, but it was a couple years after that we saw the release of the smartphone come out, the app stores that came out after that. So I think we'll see a similar cycle here with AI. There's still far, far more to come in that trend.
We're keeping an eye on China. We're also keeping an eye on the Fed data. The non-farm payrolls coming out on Friday is critical in perhaps pointing the direction of where rate cuts are headed. What assumptions are you making, and how do you see that impacting emerging markets?
I feel like we've been talking about rate cuts for 2 years now, waiting for that to happen. And so much of that is already priced into the market. We've seen just so much of this data. As soon as the probability turns high, we see those markets move. So we really have to think 6 months ahead here. If we do see a rate cut, I don't think that's going to change too much in terms of our positioning in the portfolio at this point. We do think that we can continue to see an opportunity here for EM. We've had 10 years in EM where we've been totally out of favor from an asset allocation. U.S. continued to run relatively hot this year. Even after earlier this year, we did see a little bit of a bobble, and we started to see some allocation away from the U.S. We've heard a lot from investors about diversification within that portfolio, but haven't seen a lot of activity. So I think we still believe that there is a allocation event that will happen there, and we'll start to disperse some of that capital around the world a bit more. I think one other theme we're also seeing is just this idea of local investment. So that's another thing. We're always talking about foreign investment going into emerging markets, but I think one theme to look at a little bit more is just the local support in these equity markets, and also emerging markets supporting the markets themselves. We're seeing that between, if it's Middle East and Southeast Asia, if it's China across other emerging markets. So there's also that capital opportunity across the emerging markets, not just always looking for that Western capital coming into EM.
As you said, we've been talking about rate cuts for the past 2 years. We've also been talking about how EMs will outperform DMs for years now. And what's going to be different this time around? I mean, is it the fact that, we're looking at a weaker dollar that would eventually provide the support for emerging markets?
No, I think the weaker dollar is a big part of that. That's very much a part of the opportunity. Currency impact makes up 1/3 of the returns for emerging markets. We've seen that over time. Also, some of these themes that we've been talking about even today, tech is an incredibly strong part of emerging markets. That's very different than what we even saw 10, 20 years ago. So I think you have a number of these drivers and tailwinds, also just coming from a low base. As I said, we had 10 10 years where valuations were pretty beaten down, not a lot of foreign investment coming in. So if we can get those stars to align, we saw a little bit of that this year already in a very, very volatile year for global markets, and EM's putting up some pretty strong numbers overall. So let's hope we can see that going forward into 26.
Amy, hang tight. Amy Oldenburg, head of Emerging Markets Equity and Morgan Stanley Investment Management, is staying with us. Up next, Thai lawmakers are set to vote for a new prime minister today, with Anutin Charnvirakul poised to take the top job. We'll have the latest. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Voting is set to be underway in the Thai parliament, with lawmakers poised to pick Anutin Charnvirakul as the country's third prime minister in 2 years. That's after he cobbled together an unlikely alliance of royalist and pro-democracy groups to break a political deadlock. For more on this, let's bring in Bloomberg's Papichai Tanaka Sempipat in Bangkok. Best, what can we expect from the PM vote today?
Haslinda, Parliament is in session right now, and the voting is set to begin later this morning. It's going to look like a showdown between two candidates, between Chaikasem Nitisiri of the ruling Pheu Thai Party and his challenger, Anutin Charnvirakul from the rival Phumjai Thai Party. But in reality, Anutin's victory is almost certainly in the bag. He has cobbled together a coalition already, but his success will really come from the opposition People's Party, which has offered to lend its support on conditions that he has to fulfill later. His win will end some political stalemate that began after Paetongtarn Shinawatra was removed as prime minister by the Constitutional Court last week. And but under these conditions, Anutin will only lead an interim minority government for only about 4 months before he has to call new elections.
That's right, and it is a fragile coalition, so the question really remains, how long can he stay in power? We're also hearing about former Prime Minister Thaksin Shinawatra suddenly leaving Thailand. What's behind the move?
Well, the former Prime Minister Thaksin left Thailand suddenly last night in a private jet, initially claiming that he was going to see a doctor for medical checkup in Singapore. Immigration authorities in Bangkok held him for about 2 hours to check his documents, but ultimately let him fly because there was no arrest warrant or a court order banning him from his overseas travel. But Haslinda, that plane never reached Singapore. It took a sharp turn west over Malaysia and landed in Dubai. Thaksin later posted on X that he had to change his route because he would have arrived in Singapore's private jet airport too late. The question is now the timing of his departure raises questions about whether he intends to come back to Thailand for a court ruling next week where he potentially faces jail. For what it's worth, he said he would come back, but I guess we'll see.
I guess we will see. Bloomberg's Papicha Tanaka Sempipat in Bangkok. Thank you so much for that update. Let's get perspective. Amy Oldenburg from Morgan Stanley Investment Management is back with us. Amy, your thoughts when you take a look at developments in countries like Thailand? I mean, you know, as a foreign investor, how much appetite is there to be investing in such markets?
Yeah, it's really unfortunate to see everything that's happening in these markets, Thailand and Indonesia right now. We just have so much unrest there. And honestly, for foreign investors, and even I would say beyond foreign investors, it's an unrest and an opportunity cost that I think is very hard to take right now. I think if you think of the perspective of global EM investors also, both of these markets only making up just about 1% or a little over 1% of the EM index. So they're already small percentages of the overall universe, and they're not giving them any good reason to look at this opportunity as an opportunity to get in. I think one of the things we're seeing too is even if it's a market like Indonesia, you're risking credit rating issues, you're risking issues with the overall domestic growth, and that's not going to be good for investment going forward. So you need a little bit of stability here before you're going to attract foreign investors for that opportunity. But maybe it's a lower cost at some point down the road, and we see investors come back if we do see that stability settle in there in those markets.
For someone who sits in the region, I tend to think that we have seen this many times before.
Yeah.
And markets like Thailand and Indonesia, they have shown resilience. They do pick up at some point. Stability does return. Do you take comfort in something like that?
I think that's right, and we've been investing in these markets for a long time. And you're correct. This is nothing new for EM investors. It's definitely something that we deal with on a regular basis, and we've dealt with over the decades. Again, I go back to that point on opportunity costs. I think the challenge that you have at this point of time in the market, if we look around the world and look at the asset classes and the opportunities that you have for investors to put capital, there's just too many other opportunities there to really look at this, at least from a foreign investor perspective at this point.
When you take a look at political upheaval, it's not just in countries like Thailand and Indonesia. You're seeing that in the U.S., in Japan, in Europe. When you take a longer-term perspective, could EMs be, I guess, the haven play in the end because of the growth potential you get in these countries?
Absolutely. I mean, we think about that all the time, and I think some of us joke who spend or live in the U.S. that the U.S. in some cases is looking more like an emerging market, or some of the things that we're used to around the volatility, around some of the changes that have taken place that we usually see in the EM markets. And the EM markets have also experienced decades of learning from each other, some of the challenges they've faced, if it's corruption in governments, if it's fiscal policy that needs to be set. We've seen more responsible, more orthodoxy in some of these markets than we've seen before. So that is a positive. And as you said, there is the growth opportunity. There's still strong demographics in many of these markets. And it is where a lot of the global growth is going to come from going forward. So all tailwinds for emerging markets here.
That said, not all EMs are the same. Which ones do you like in particular?
What we like in particular, of course, Asia is a big market for us. That continues to be the largest overall within those markets. Still looking very selectively at stocks within North Asia. I think away from that, though, Latin America is looking quite interesting. Mexico is well positioned as related to the U.S., just fighting through some of those tariff negotiations. But the U.S. really needs Mexico, and it's well positioned there. You also have Brazil. We have elections next year in Brazil. We have the tailwind with the currency there and a very strong consumer base. So we do think that Brazil is a really interesting market to keep your eye on. It's had a tough run up until now, but we think going into the elections next year, we should see some interesting performance coming out of Brazil. And it's actually performed relatively well this year to date already. So we think that will also continue, and hopefully we get some opportunity there with elections.
And Amy, before we let you go, I'm just wondering, for EMs in Asia in particular, how contingent is their performance on China data? I mean, if you take a look at manufacturing, lowest level in 6 months, that impacts countries like India.
They're very, I'd say they all have their own elements of movement. And one of the two markets that we've looked at, Korea doing super well this year. One of the data points we found is when EM does well, Korea does well. When the U.S. does well, Taiwan does well. So we do see this disconnect between some of the different markets happening. Again, you see a market like India too. So many moving pieces in India, but the long-term story is very much intact there. We're still very constructive on that investment opportunity. We see a big focus on infrastructure development right now. We see some tax cuts happening there, trying to just balance out some of this impact on the tariffs. So again, very different elements there. It's our job to continue to just navigate this, and we like exposure to multiple markets.
Great perspective there. Amy Oldenburg, Head of Emerging Markets Equity at Morgan Stanley Investment Management. Keep it here with us. This is Bloomberg.
Chips and semiconductors, and we'll be putting tariffs on companies that aren't coming in. We'll be putting a tariff very shortly. You probably are hearing we'll be putting a fairly substantial tariff on, not that high, but fairly substantial tariff.
President Trump warning of more pain ahead for the chip industry during a dinner at the White House with top tech executives. But he clarified that goods from companies that have pledged to boost their U.S. investments will be spared. As Washington ramps up its protectionist policies, other countries like India are stepping up efforts to boost their self-reliance in chip manufacturing. At the Semicon conference in New Delhi this week, Prime Minister Narendra Modi doubled down on the country's chip ambitions.
सेमीकंडक्टर की दुनिया में
In the semiconductor world, oil is black gold, but chips are digital diamonds.
For more on this, let's bring in Bloomberg's Manika Doshi in Mumbai. Manika, India's semiconductor mission seems to be picking up speed.
Well, you're absolutely right, Has. But before I get into the details of that, let me tell you, when Jensen Huang, the CEO of the world's most valuable company, which is a chip company, NVIDIA, was in India last year, he said about a third of NVIDIA's senior leadership and engineers are Indians. Now, there is a lot of India in the chip-making industry worldwide, but there are no chips in India. And so we're building this industry from scratch. Hence, over the last 4 years, since the government launched its semiconductor mission, we have progressed, but no success because there aren't any outcomes. Lots of projects underway, 10 at the last count, about $18 billion in investment commissions or commitments, lots of government subsidies going to many of these projects, about 23 chip design projects sanctioned, and an extensive training program that so far, government data indicates, has covered 60,000 students in India. So there is progress, but there is also some concern that currently the shape of India's chip industry as it's building up does not include any large marquee investors. There are only a few fabs and more assembly and packaging units within those 10 projects that have been approved. And hence, we need to be able to attract the big players. The second concern is the sustained investment required in building up the entire ecosystem, from chemicals to gases to wires. How are we going to be able to accomplish that? And whilst there is a lot of engineering talent in this country, there isn't enough skilled labor when it comes to the manufacturing of chips, which is an industry that depends on precision and purity. So those are the opportunities and the challenges that face India's semiconductor mission. We've made progress, but I just want to remind you that it took us about 10 years to get where we are with Apple iPhone manufacturing, which is considered to be a bit of a success here in India. And even now, the value addition when it comes to iPhones is only skin deep. There's so much more to do. So when it comes to semiconductors, we're in it for the long, long haul.
So a big, ambitious plan, lots to do still. Manika, stick around because we're going to deep dive into India's chip ambitions with a man who has more than 3 decades of semicon and electronics industry experience. Ashok Chandak is president and CEO of the industry body, India Electronics and Semiconductor Association, and he joins us from New Delhi. Ashok, good to have you with us. Manika has set the stage for us. The question is, how quickly can India play catch up?
Well, India is late in the manufacturing perspective, but the Indian semiconductor industry is already few decades in existence. Most of the global companies, including Indian companies, are doing the design-related activity, which is the chip design, testing, validation, verifications, and other stuff. That is one important element into the overall value chain. While the only semiconductor manufacturing facility, which is the semiconductor lab in the north of India, has been operational to some extent, but the overall manufacturing step up was missing. And that is what the progress which is happening now. As Manika already indicated, $18 billion worth of 10 projects have been approved by government. And obviously, this takes time. The OSATs takes about 12 to 18 months to be operational. The foundry, the fabs, they take about 4 years to 5 years, depending on the node you manufacture, to get completely ramp up. And that's a work in progress. So overall, we see that India is looking at right now 3 major topics here. Number one, the market opportunity. The global semiconductor market would reach very soon by 2030 $1 trillion. and corresponding India demand would go more than $100 billion. Number two, the Indian industries and conglomerate are showing deep interest in expanding as well as diversifying into the chip making and electronics manufacturing activities, which is a strong appetite and interest. And correspondingly, the India government support in terms of the policy measures. The India Semiconductor Mission, which was established, has already done quite friendly policies, which is attracting the investment into this sector. And that is where we got these 10 projects which are approved. And obviously, we are leveraging onto the design strength using the schemes such as design link incentives as well as the expanding the fabless ecosystem, which will help over the next few years to take up additional speed so that we become a sizable player in an international market.
Ashok, you mentioned, the progress that we've made, but there is one big concern, which is that India hasn't been able to attract any of the large chip makers. How much do you think that undermines the progress that India's semiconductor mission has made? And do you expect to see any of those investments come to India?
Yeah, we have to look at this point into twofold. Number one, India does not have any homegrown chip brands. So that is where we have to depend on the overseas players on two counts. Number one, the global companies setting up their own captive manufacturing unit, just like they set up the design units. And number two, the global companies doing kind of a joint venture collaborations or technology transfers with Indian conglomerate. So on the second point, we already see a good progress where a lot of projects are moving with the international participation in terms of the technology transfers or joint ventures collaborations. Coming to the first point where the global chip making companies so far not investing on their own captive centers of manufacturing, except Micron, one of the company which announced their plan, that has happened. But I would say that we should not get bogged down by that particular aspect. Globally, the entire semiconductor industry is also, the players are looking at how they diversify, which region they go and how they get the manufacturing done. And the collaborations is a key over here, including the international operations, as well as the OSATs particularly. Most of the chip companies, they have followed recently, last 10 years, asset-light strategy. That means they do not do much of a bulk investment on their own manufacturing of the fabs and foundries, and they depend on the partners or the outsource activity, and that remains still a big sizable opportunity.
Ashok, it's not just about attracting big chip companies to India. It's also about tech access. And we learned that you need equipment from the likes of ASML as well as Applied Materials. And because of restrictions on tech, export controls, there are limits to how much access India can get.
Yeah, indeed, that's true. If the chip making has to expand on a fast track, and to the latest technology nodes, there are some export control restrictions. What we have seen recently, give you an example, this Semicon India event, almost every equipment making company was present. And they are also looking at India as a sizable opportunity for them to be addressed. Finally, it's a business for every company. And they are also willing to look at India being a trustworthy partner, getting into, and you can see that picture, to getting into this and provide the necessary stuff. We have to look at the semiconductor manufacturing in two areas. One is called the leading edge node, and the second is a lagging edge node. In a lagging edge node, there is no restriction at this moment as far as my understanding goes. And this market is also sizable. There are some restrictions which may limit 2 nanometer or 3 nanometer kind of a manufacturing activity. And India is not really pushing too hard at this moment on that side. There is almost 40% of the semiconductor market goes at the node which is called 14 nanometer to up to 120 nanometer or even 180. And that's a big room to play. And most of the India's demand would also be served with that, including the global demand. So my view is the equipment companies are definitely interested to work within India, and they would provide necessary know-how as well as the technical equipments as the opportunity emerges.
I think we have to draw a distinction. Producing test chips is one thing. Producing it at a commercial scale, at a cost-competitive price is another. Realistically, when can you get there, and what kind of quantity and quality can India produce?
See, if you look at the, based on the current 10 projects, those are approved for receiving the incentive from the central government, and there are 4 more projects approved by some of the state governments who have a federal structure. And the capacity right now, what we look at is about 80 million chips per day. All these projects, when they get operational in terms of the assembly test operation, it's 80 million chips per day. And I expect that capacity would mostly be live in about 2 to 3 years time frame. That goes on. Now, coming to the fabs and the foundries, currently only one foundry has been announced, which is by Tata in collaboration with PSMC Taiwan. There are some more projects should step up very soon. We need to wait for that. The foundry related, the power semiconductor technology called the silicon carbide, or we call it a compound semiconductor, silicon carbide GaN. These are also announced. They would also be operational in 2 years time frame. So, and we have seen already some of the test chips and pilot launches during this event of Semicon India, as well as other activities. So I would call in 2 years, you would see a mass production of the assembled chips out of India. And about 4 years time frame, couple of those fabs, the Tata as well as those silicon carbide and GaN would be operational. And as the new projects take the shape, they would also get into the operational pretty soon. And we would see sizable production from India. But also I want to tell you, these all put together will still be not more than 3 to 5% of the global demand. So there is still a large room to play. And the Indian industries, the government and stakeholders are fully aware, being the nature of this industry, being a long haul, it continues.
Yeah, I just wanted, you mentioned 3 to 5% of global demand. You also said this is an industry that is likely to head to about $1 trillion globally by 2030, of which India's demand will be about 100 billion. By 2030, how much of that 100 billion demand in India will we be able to meet ourselves?
Well, I would look at, let's say, let me answer in this way. You know, no country will make the chips only for their own consumption. This semiconductor industry is truly global in nature. So whichever country makes the manufacturing, it is for own consumption and global. So we're looking at $20 to $30 billion worth of chips to be assembled in India. And half of that could get as a foundry or fabs based on the current projects what we see. Plus, they would be exporting as well out of India. So India would continue to remain major importer as well as partially exporter of the chips.
All right. You mentioned more foundry projects coming to India. Can you give us some names? And where do you see some of the next big investments taking place, you know, especially within the entire ecosystem? For instance, chemicals, gases. Can you just take us through what we should expect as the next big deals or investment announcements in India's semiconductor industry?
See, as indicated by Honorable Prime Minister and Union Minister, they are looking at the second phase of the Semicon India program. So that announcement should happen over the next few months. I'm not here to able to give you the complete timeline because it's the government prerogative when they decide and what they launch. But we have been given the indication to the industry that the next phase would definitely come, considering the importance, long-term nature of this industry. Also, the supply chain is very important, actually, to be successful in the semiconductor manufacturing. You cannot continue to import chemicals, gases, materials perpetually. So this industry is also taking shape. India is a sizable player in the manufacturing of the chemicals and gases, but India does not make those products to the purity level as desired and needed for a semiconductor industry. And that's a work in progress. We have seen that several companies in India, those have got an appetite. They have already started talking to the global players to see how they get a technology access or a collaborations or a self-development of the technology. So the chemicals, gases, materials is the next thing which will definitely go on. And we would see a concrete outcome over the next 2 to 3 years on that count. And we have also seen some of the global players participating in India during these events as well as the networking meetings they keep doing in India recently over the last 6 months, including Merck, for example.
Ashok, India and Singapore have agreed to deepen ties in AI as well as chips. Could you shed some light on what that could translate to, what deals were signed?
See, right now, I'm not able to clarify the deals those are signed because many companies are keeping that to their own confidentiality. However, I can indicate you there is a strong engagement between India and Singapore. There is a country-to-country MOU which is signed by these two governments, and also the industry bodies such as SSIA, Singapore Semiconductor Industry Association, and ISA, and others are talking, including Enterprise Singapore. They are working together. We had recently the roundtable between India and Singapore just a couple of days ago. Strong degree of interest. We see that the strength of the Singapore is they already have large pool of trained manpower, both for the fabs as well as the OSATs. And that's one of the potential area which is taking very good shape actually, as India also needs the trained manpower for the manufacturing. So that's the first thing which is getting cracked now, and it's progressing very well. In addition, there are a lot of small, medium enterprises within Singapore. Those are also having this technology developed. That collaboration is ongoing. But Singapore also has a lot of global players actually, so that's a global nature anyway.
Presumably, the plan is to be an alternative supply of chips to China, given, the tariffs imposed by the U.S. When might that happen?
I would call that it is not the question of India becoming an alternative to any other country. India's roadmap is a bit simple, actually. It's looking at more as how do we play a role into the global value chain. And being a global nature of this industry, there are many countries they would play a role. Today, India's role is mainly on the design side of it, and India would like to play a role which is even beyond design activity. So let's not worry too much on this. And my message to the viewers is there are several countries, they would have a technology, they would have the manufacturing, they would have the design competency as we go in future world. And there will be several countries they would be consuming as well. So it is not a question of any isolation of any other country. Everybody has their role to play, and India would soon become a sizable player in the entire value chain.
Ashok, thank you so much for joining us today. Ashok Chandak of the India Electronics and Semiconductor Association. And of course, our thanks to Bloomberg's Maneka Doshi. India's been trading for about a minute and a half right now. Let's take a look at how the markets are doing. We're seeing pretty much our gains across the board. We're seeing the return of global funds due to a more investor-friendly policy mix, including a cut in the goods and services tax, as well as a reduction in interest rates. Sensex currently up by 0.3%. The Indian rupee trading at 88.1138 versus the USD. Still to come, tensions between Jane Street and Indian regulators are heating up. We'll have the latest on the trading giant's surprise appeal against SEBI's market manipulation charges. Keep it here with us. This is Bloomberg. Welcome back to Insight. Trading giant Jane Street has blindsided India's market regulator with a surprise appeal to toss out SEBI's market manipulation case. Sources say officials were caught off guard by the filing, only learning about the move from news reports about the appeal. Let's get more details with our senior Asia equities reporter, Abhishek Vishnoi. What do we know?
Well, as you can see, our reporting is showing that Jane Street has filed an appeal against SEBI's case, and some officials on SEBI's end are surprised. It looks like, some officials were not expecting this to come from Jane Street's side, but, it's the natural course of action for a lot of people in the market that you get some breathing space first, and you get your house in order, and then you file an appeal. I mean, if you look at any rich entity which has been caught in the crosshairs of regulation in India, especially under SEBI, they have gone to SAT, and this is somewhat unexpected lines from historical point of view. Now, Jane Street can say and claim that they weren't given access to a lot of things, and SEBI can say that law evolves and law belongs to them. But the point is that the laws need to be followed in letter and spirit, and it would be analyzed and interpreted by the regulator, by the court. Let's see see if the court gives Jane Street access to these things. But in past, I was looking whether something similar happens in whistleblower reports, whether something similar happens in SEC or with SEBI. I mean, usually summarized allegations are given, not the entire amount of data or complaint that a regulatory agency has received. So, it's a battle that will continue to happen. There would be twists and turns. But honestly, if you look at the market, I mean, I think market has started looking past it. It's not an issue for the index. The issues there are tariffs and other things.
That's right. And speaking of other things, Abi, Indian investors are probably still rejoicing of the streamlined GST structure that led to tax cuts. Speaking of which, I've got some good news. We had discussed how popcorn had become a symbol of India's complex tax system with different duties depending on whether it was salty, packaged or caramelized. Well, here's the treat. Authorities have clarified on social media that no matter what you decide to sprinkle on your popcorn, salt, spice or caramel, the tax will be a sweet 5%. A real relief for those with a sweet tooth that thought a nice bag of caramel popcorn would still have an 18% tax tag. So, Abi, I mean, this is good news, right? But we've seen some reaction. They've already factored all of that in. Might we see a further reaction in the market?
That's right. I mean, like you mentioned, we have seen some reaction. Prime Minister Modi actually mentioned this thing during his Independence Day speech. So it was expected. Markets were reacting to it. It was one of the buffers on valuations and earnings side, in context of US tariffs. But, what has reacted are those staple companies, consumer staples as a theme, but discretionary is yet to react. So there are hopes like, aircon makers of handsets or companies involved in those chain, they might do better. There are even certain car companies and, farm equipment or tractor makers that are, analysts are yet to discount this news. So that's the theme that may do better. This two-tier system than a multi-tier system does work in favor of India. And if you look this in context of what the central bank has done and what central bank can do in terms of rate cuts, what the government has done in terms of capex or coming back to it, recent comments around semiconductors and things, put it all together, this then sows the seeds of a new earnings upgrade cycle for a market which has been underperforming. So, India can cut its underperformance.
It's been pointed out that the autos in India have outperformed the IT sector. Talk to us about whether this is set to continue.
It may be, because IT is actually an export bet, and IT is also in the crosshairs of those immigration laws that US and Trump has been championing, right? And making a sort of a pawn in this, a negotiation for trade and tariffs. And on the auto side, it's a very domestic sort of, bet. It's a very inward-looking bet. It's that consumer discretionary consumption bet that India has been known for before the semiconductor event. So, it may continue. You may see that, TCS, Infosys, and, names like Wipro might actually underperform as per analysts and fund managers' views. And on the other hand, domestic-oriented bets on discretionary side, autos and so forth, might do actually better.
Abi, great stuff. Bloomberg Senior Asia Equities reporter Abhishek Vishnoi here with me. Now, before we go, here's a look at our guest next week. We'll discuss the outlook for oil after the latest OPEC Plus meeting this weekend with FGE's Feridun Fesharaki. Plus, don't miss our interviews with Mitsubishi Power President and CEO Takao Sukui and National Bank of Cambodia Governor Che Seri. That is it for Insight. Horizons Middle East and Africa is next. This